But for longer and medium term and near term themes, Dipen Sheth, the head institutional research at HDFC Securities, has joined us in the studio. Morning again, Dipen. What's the trend looking like in the near term? Are we going to be stuck with 8,200 to 8,600 for a quarter now?
So it certainly looks like we are stuck in some kind of range till we get fresh triggers. Whether you say 82 to 86 or 8,000 to 9,000 is just a matter of how diligent a chartist you want to be, and that's not really what I want to talk about. So if you look at the 1Q numbers, they are mostly uninspiring if you are a pessimist, and they don't matter if you want to be an optimist, because you are buying into the longer term healing of the economy. So you can take sides here, and this is typical India. You know, we'll take 2 steps forward, 1 step back, and then we'll go nowhere for a while. So I think it's the nowhere for a while phase. And government is also, you know, busy fighting its own unproductive battles, if I can say so, whether with the opposition in parliament, whether the friction with neighboring countries, whether, you know, with state governments, or even its own bureaucracy. We understand from informal channels that there is a lot of pent-up frustration and agony with bureaucracy at the kind of changes that are being unleashed. I would largely back those changes, but then any bureaucracy takes time to adjust to changes, right? And all the known devils, if you will call them that, the monsoon was initially weak, now it's kind of picked up.
Was there any surprise in the surprise in the earnings season that you would latch on to?
Nothing that stands out.
Specific stock?
Nothing that really stands out. I would say that there has been some inspiration from some of the IT stocks. There has been some inspiration from the FMCG pack, especially the FMCG pack, which is skewed towards raw material costs attributable to or linked with petroleum prices or crude prices. So we saw fabulous numbers from Pidilite. We saw
Godrej, you
very good numbers. Sorry.
I mean, Godrej, consumers.
So Godrej. So I think the question there is valuations, and the question there is whether this whether it's a sustainable game. The skew, if you will look at, again, in terms of our preferences, clearly lies towards guys who have a crude exposure on their raw material side. And with Godrej, that's limited. It's not absent completely, but it's limited. Asian Paints, for example, magnificent.
The interesting part this earnings season is that, you know, generally we are used to PSU banks reporting asset quality pressures, but this time there's some worry crept into the system with respect to private sector banks as well, names like ICICI Bank, etc. How do you wade through that, and what would your top picks be there?
Yeah, so we published on banks recently a sector note before the results season opened up, and we did a lot of digging around. We met lots of managements, and you know, we tried to dig deeper into the numbers and so on, and what came out was that we were looking for change where there was none.
Okay.
So the more things seem like changing, we've got this new government, and there are so many hopes of a revival in the economy. Financial savings will increase as inflation falls off. Deposit accretion is not going to be a challenge. So when will credit growth happen? And, you know, credit growth is stalled, actually.
Yes.
Completely stalled. But more serious than that, I think, is this big thing of there is one huge monstrous lever which just refuses to change when you look at the banking sector as an investor, and that is the lever of asset quality. And there's a big skew, again, between PSUs and private banks. Yes, there are private banks also with worries on large corporate exposure and asset quality issues, but they're nowhere near the kind of pain that the PSU banks are facing.
So what do you do with these stocks then?
So let me tell you the flip side. At some stage, PSU banks will make fabulous investment ideas. But for that, the way they are run and the environment in which they are run has to change drastically. And that's the crux of what we figured out when we made out this report. That the way, so how much are PSU bank managements empowered? Okay, how well are these banks capitalized? What kind of leeway do they have? How well do they pay their top managers? What kind of leeway do they have in terms of recovering bad loans? What's the bankruptcy law like? And if something gets stuck, if a project gets stuck, what kind of recoverability and what kind of environment do you have to recover these bad loans? I think it's all so murky, and there's such a lot of credit tied up. So out of your 73 lakh crores or whatever it is of credits, I think 70%, about 50 lakh crores, would be the PSU guys.
Yes.
And if you look at the bank nifty, okay, so here is another way of looking at it from the stock market perspective. The bank nifty is some 84-85% private sector.
Banks.
And the system has got 70% public sector credit exposure, right? So here's a complete skew. And if you look at the performance of the indices, whether it's the Bank Nifty or the PSU Bank Index, you will see there's a story.
So would you go out and buy PNB, buy BOB? I mean, in PNB, for instance, the bad loans, the fresh slippages fell, but some of it could be disguised as refinanced loans.
Absolutely. So now you have a 525 window, and so here are the numbers. PNB is available, according to our research, at 0.8 times F17 adjusted book. BOB is available for... Now, remember, BOB was a very respectable, and it's still a very respectable corporate sector focused PSU lender, 0.93 x F17 adjusted book. The venerable State Bank is at 1.14 x subsidiary value. Compare that with an allegedly stressed private sector lender, let's say ICICI Bank, you mentioned them specifically. So we know there are some large corporate exposure challenges for ICICI Bank. Jayaprakash was downgraded recently and so on. So even an ICICI Bank is at 1.62x, and there is strong hope because of, again, so ICICI Bank has in it, has what it takes to come out of this hole, is the hope that this valuation is expressing, right? But what's the hope for Canara Bank at 0.57? What is the market telling you? What is the market telling you about that inconsistent slippage bank called Bank of India at 0.52 adjusted book? So even if ICICI Bank looks battered at 1.6x, 0.52 for Bank of India sounds absurd. And you know, here's the funny thing.
Okay, Dipen, what do you prefer in the list is what I want to know. Would you go out and buy? Bank of Baroda could have P.S. Jayakumar as its managing director. Bank of India could have G. Padmanabhan, former RBI ED, as its chairman, not managing director, but non-executive chairman. Those are the names that are doing the rounds. Which public sector bank are you buying?
It's not the names which will do the magic. It's the changing in the rules of the game.
No, so are you going to buy any of the banks?
I will not buy them till I figure out whether the circumstances and the structures under which these banks are being run, are these going to change? So do you mean to tell me that Mr. Malia or Mr. Mundra at Bank of Baroda were not capable CEOs? Of course not. They were very capable people. In all our interactions with PSU bank chiefs, we come back educated and enlightened.
So what would you buy now, if not the banks? Let's finish.
So within the banks, I would say, despite the large corporate exposures and exposure to power and so on, I think the one bank which has done admirably well in terms of its asset quality is certainly Axis Bank. And here is a huge, large bank, you know, a large cap bank with a very large exposure to large corporates, and has still managed to hold on to asset quality as well as increased granularity on both assets and liabilities side. So I would go out on a limb and buy Axis Bank at this valuation.
All right, we actually need to cut across to the emphasis management that is currently addressing the emphasis management. But let's get back to our chat with Dipen Sheth. Dipen, the one stock that has been in a bear market of its own is Tata Motors. What would you advise long-term investors to do now? The ones who hold Tata Motors and the ones who don't?
We have a buy on Tata Motors. We published a conviction buy on them recently, and so far we seem to have gone a little wrong, and I'm not too worried about that. I think the big story on Tata Motors, so if you look at their mix of EBITDA, it's like 90% skewed towards JLR. So Tata Motors, to my mind, is a JLR story, and you can tell me all that you want to tell me about CV revival in India and, you know, the new launches that they've made on the passenger vehicle side and all that. All that is very interesting and very encouraging. But what really swings the needle for Tata Motors is JLR, as we all know. And the challenge on JLR is what is going to happen to the stumble that they are facing in China. So the locally manufactured Evoque, will it pick up in traction, and have customers gone through a disillusionment of sorts with respect to, you know, market traction there? I think the product mix, the product quality, and the brand portfolio that they have, and the relatively low single-digit market share that they have in China is so low that they just can't get it wrong consistently for too long in the world's largest car market. Okay. And if you look at
the buy in distress,
absolutely. So you can go wrong buying them for you know, the first 2 or 3 months that you've bought them, but I don't think you can go wrong from a 2-year perspective over here.
Fair enough. I also wanted to ask you about you know, the tech companies. Emphasis, since we are working off the Emphasis results, Tech Mahindra numbers. Which of the mid-cap IT companies form a part of your portfolio, or you would like to?
Mindtree, for sure. So again, in mid caps, the challenge is always, can they get there? Can they get their quarter-on-quarter growth right or not? And because there is lumpiness in the way they grow. So KPIT, we went out on a limb and we were proved wrong for a while. But I think there is sign that there is some kind of a resurrection in progress at KPIT. So KPIT and Mindtree come first to mind. Mindtree is delivering, performing and running away in terms of the growth that they are delivering. And everything's going right for Mindtree. Nothing was going right for KPIT till a couple of quarters ago, or one quarter ago. And now I think the management has kind of woken up and has figured out the reasons for the stumble. And I think over the next year or so, you should see a reasonably good revival there.
All right, Dipen, we leave it at that. Thanks for joining us and talking about all of those stocks and sectors. By the way, the market is doing quite